Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, February 25th, 2025. So we saw some more panic going on today, and I'm showing you the VIX chart because it's a boring chart. I know it. I always post it up. It doesn't really change that much, but the thing is that when we're in this area, this is where the complacency is, and typically what happens is these are when the good condor trades work because will pop up and then just go sideways, so it's very easy to do it. But what it's telling us, the longest it stays pinned down here, you're going to get one of these pushes up. So you want to take away the when it's down there, the longer term view of being bullish, because everybody's bullish and they don't have protection. What you want to do is wait for them to get forced into buying protection, and then that's usually when the panic hits, and then from there the market goes up as the VIX comes down. So we're at the first part of the range right here. I do believe we're going to go higher than this. It may even, I would not even rule out us getting somewhere up into the 30 before everything is said and done. So I show it just because it gives you an idea of where we are. Now, I don't know if they did the put call ratio. Hang on one. Yeah, they didn't update it yet, but this is basically what I put into the premium report today. So we got a spike in the past couple of days because we've been in these areas where you almost have to anticipate there's going to be a sharp decline, because when you have the VIX that's hanging out at these low levels here, and then so it's telling us that there's no put protect. Nobody is buying any kind of protection on volatility. And then when you come and you take a look at the put call ratio and everybody's there, what it means that everybody's buying calls. So when the herd or the peeps or the mentality is all looking up, I can assure you, doing this for 30 years, you do not want to be looking up with them, because there's going to be a hole in the floor and you're going to go right through it. It doesn't mean that these things have to turn right away, but it's going to give you the idea as far as I need to be a little defensive, maybe take some money off the table if you're long, wait for the pullback, and then put that money back to use again. So that's the reason why I showed these, just to give us an idea of where's the retail mentality at right now. Are they looking long? Are they looking short? Are they panicking and now buying puts? Because once they start buying puts, typically that's when the market goes back up again. But when it's down here, it has this type of this is really, I would say, the risk is some big moves like that. So I just figured I would show you that part. If we take a look at the S&P, this is the hourly chart. So once we opened up, we were kind of hanging out right here, and then we just had this big candle straight down, and from there, this was the support level that I was looking. We took it out a little bit, and I had mentioned in the room, I said, if you guys want to trade technically, a setup, it would be you look to go long once this high right here is taken out. So if somebody did it, they got long at the 59.47, and they could have rode it up to the 59.74. Now, I took a quick trade, and it was basically when we were trading right around here. And I said I'm gonna go with just a very, very small S&P call trade, and I said it was only one contract, and I had my stop at 59.43, so I was probably risking about $100. But this was the upside. I actually thought we were going to get up to the close to the 6,000 level, but we made it up to here. That one contract that I picked up. At one point, it was worth $1,300, and I ended up getting a little cute with it, and it came back down. But right here, from what I've gathered as far as information, this was where the NASDAQ, they had margin calls, so that brought everything down in a matter of really 15 minutes. We saw the S&P go from 59.80 all the way down to the 59.48. So I gave up some of it there. It was overall, it was a 0 day. We made $140, but It was that was because the first, the trades that I was looking at first, I was expecting that we were going to get some kind of bounce and then down. So I got out of my short positions pretty quick, and then from here got caught on it. So the market was moving very fast today. So I really didn't want to be risking anything on it, and when you could walk away, I was in the hole maybe $800. It was anything that was unmanageable, and like I said, we walked away with $100 in the green, so it was really a nothing day. But tomorrow, what I'm looking for is, I do believe that we are going to get some kind of bounce. We have, just as I showed you, we're starting to see panic in this market, so I'm looking for a move. I think I have it laid out here. Yeah. So basically, in the morning, we're going to be opening up. Well, we're right around that 59.55. I'm looking for a move that's going to take us somewhere into the 60.10, 60.41. If this area hold, and it could be tomorrow. I don't think so. I don't really know what. Oh, we have NVIDIA earnings. Maybe that would be on Thursday. But in any case, if it comes up to the 60.10, we just want to see how things are lining up, because it may be a really good area to start looking on the short side again. But right now, I took an overnight SPY trade. It's not a lot. I did 10 contracts. So if it ends up going down, I'm still going to be looking to add to that position, because I still believe we're going to be heading up here just to wash out some of the shorts before we start coming down. But in the end, I've been telling people in the room that we're trying to dig out a kind of an important low, meaning a tradable low, and it's going to take a little more time. And I do believe that we're going to be trading somewhere here, either closing the gap at the 58.40 or coming all the way down and testing the January lows at the 57.70. So this is where I believe the ideal buy area is, and those are the ones that you could hold on to. Once we get into the March, the March, April, May is a pretty bullish time period. So once the bulls are up and running and the fear is gone, and all the say retail traders are washed out, you can see us back up at these levels in a matter of a few weeks. So that's why, when we get these rips and everybody's complacent, I always say, start either being defensive with your long positions if you're there. Building a short position is hard to do just through videos and reports, because it's more of a feel and stuff like that, but it's so I don't really like to recommend that. But what I do say is, be defensive on your long positions here, take some off the table, wait for the pullback, and that's what I've been doing with the quantum stocks. The same exact thing. Once we get these big rips up, I take half of it off, wait for it to come down, buy it back, and just rinse and repeat this process. And it's been working out great, and I think some of those stocks are going to be ready to burst. And again, I'm not trying to guess when they're going to explode higher. Maybe 6 months, maybe a year, maybe 2 years. But these stocks are going to, they're going to be probably looked at. Some of them, not maybe one or two, if that. They're going to be your next big company. Not like I'm not saying as big as NVIDIA, but it's going to be one of those type things. I mean, you could have picked up NVIDIA 10 years ago for probably $2. So that's the reason why I like these types of stocks. They have huge returns, but you have to go into these understanding that some of them are going to go bankrupt. So anyway, tomorrow, if we open down, I think we would either get a test of these lows or a slight break, but I'm still looking for the overall move to come up here. And one of the reasons that I can see it is, yes, we have NVIDIA earnings after hours, but there's a lot of people that have made some pretty good money on the short side the past few days, and they're going to cover, and we're going to get that spike up. And I think that once we get into this area here, the bears are going to wake up and start shorting again. So right now we have small bullish divergences, nothing really crazy. 15-minute, we don't have them. I thought we were, but this move right here just took everything out. So you can see on the upside, 59.99, then we go up to the 60.28. So this is the area that I would say that you want to be looking at as far as an upside target. And if it gets there, you want to be out of your long positions and possibly starting to build a short position. But we'll go over that, during the actual trading day. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys in the morning.